If you live off dividends, then prices don't matter. Well, in one way, that's true. Assume the risk of living off dividends is that it depends on what we're talking about. If you've got a 3-fund portfolio, by that, what I really mean is just a market portfolio. You're basically just following the market in index funds, and you can live off the dividend and you're comfortable. That's a pretty safe thing because you're living off of what we saw in the yield for the S&P 500, 1.5%. You've got some interest on some bonds. I don't know, let's call it 2% total. And you've got a very down the middle sort of market portfolio. The issue comes in when people say, well, you know what I'm going to do? I'm going to buy some REIT that pays 5% or some covered call ETF, it pays 9%. The problem with that is the values of the underlying funds can go down. When you're getting into those higher yields, total return can take a hit. And you might say, well, but it doesn't matter. I'm still getting 9%. Yes, but 9% of what? You're 9% of a smaller and smaller and smaller number. It can be a real problem. But yeah, if you're living off dividends and you've got your basic market portfolio, I mean, the thing that makes that so good, though, is not that you're living off your dividends. I know that makes it feel safe because you're not selling shares. But when the dividend gets paid out, the value of your stock or the fund is going down dollar for dollar. That's how it works, right? I mean, and that makes sense. If a company is worth $10 million and they take $1 million in cash and pay it out to their investors, what are they worth now? Not 10 million. They just gave $1 million away for nothing. They didn't get $1 million in equipment or inventory. They got a thank you from their investors. So they're now worth 9 million. Yeah, what makes it such a reasonable approach is that you've got a market portfolio and you're just living off of 2%. You can imagine Berkshire, which doesn't pay a dividend. Let's just assume, for the sake of argument, that represented a market portfolio. It's going to go up along with the 60-40 portfolio, but you get no dividends. But you're only going to sell 2%, enough to generate 2% of the value. It would be great. It would be the same thing. It's just, it's not the dividend part of it that really matters. Hope that makes sense.